We detected an unusual trade worth $1 million on Delta Airlines stock, ticker symbol DAL. But here's what makes it more interesting. Delta Airlines stock dropped to a year-to-date low on March 7th, the most recent trading day. And so in this video, we will analyze this unusual option activity to find out if this wealthy investor is bullish and buying the dip or bearish and selling, expecting it to drop lower. Because as we all know, the rich have more access to exclusive research and information, sometimes even leaked insider information, to make better financial decisions. No wonder the rich get richer. And so to level the playing field, let's dive into our analysis to gain insights from the rich so that our subscribers and members can profit from this deep knowledge too. Speaking of profits, our previous video on Delta Airlines stock on this day, back in November, showed how profitable we were trading unusual options. This was the video we published where we locked in 507% profit ever since we analyzed the unusual option activity going long bullish back on this day. And so if you missed this video, we'll put a link up here. Make sure to subscribe and hit the bell icon so you don't miss out on these very profitable opportunities. Now, those unusual options that were bullish have already expired, so let's analyze new data to find how wealthy investors are trading Delta Airlines now. As we can see here on the options time and sales tape, the most unusual trade happened on March 7th at 9:46 at the 48-second mark for these May 16 options at the 60 strike calls. And so we can calculate the total cost of this trade, the price of $2.16. Keep in mind that options are priced per share, so we need to multiply by 100 since each options contract represents 100 shares of stock. And so each trade costs $216. And since there was a quantity of 4,998 contracts, we multiply that out and we get a total of $1 million for this trade. But keep in mind, Delta Airlines stock is at a year-to-date low, so this is a higher risk trade in comparison to the trades that we share on our website. And so if you want to get access to the lower risk and higher probability of profit trades, then go to our website. We'll put a link to our website up here where you can get deep insights into exactly when and which stocks wealthy investors are trading on Wall Street so that you can have the same opportunities as the rich. Because if the rich get richer, why shouldn't you? Now, with that said, even though this is higher risk, we still traded this, but we use position sizing to manage our risk. As you can see here on the options chain, for the May 16 options at the 60 strike calls, since this was a new opening trade, we also traded these call options and got into the same position here. POS stands for our position, and the green color means a buy position, while a red color would mean a sell position. Now, how did we know these were new opening trades? Well, notice that these options have an open interest of 185 contracts, which is much less than the 4,998 contracts being traded. It would not be possible to close out that many contracts if there were only 185 open contracts. And so we can conclude that this wealthy investor was opening new contracts and not closing out contracts. This data is very important to figure out, because if a wealthy investor is closing out contracts or trades, it could mean they're worried about that stock, so maybe it's not the right time for us to jump in. On the flip side, if a wealthy investor is opening contracts, it could signal an opportunity for us to start a new trade. And so we always take this extra step to analyze the data at a deeper level, because many other websites and scanners don't. They report all high volume unusual trades without filtering out closing trades, which leads to wrong results and losses for those following unusual option activity. And that is why we have more winning trades than other websites. Now, with that being said, not all of our trades will be winners, but as long as we diversify our portfolio with high quality stock picks backed by strong data analysis and use option strategies that can gain more than 100% profit, like our previous Delta Airlines trade that gained more than 500% profit, then we can stay consistently profitable in the long term. And so, if you want more trades to diversify your portfolio, go to our website. We'll put a link here where you can get access to more opportunities and strategies to increase your profit potential. Now, back to this trade. Based on our deep research and analysis of multiple variables and data sets, this wealthy investor bought these 60 strike calls for 216 each, the same price as we calculated and saw earlier on the options time and sales tape. And so when we analyze this trade, you can see here on the risk profile profit loss graph where the x-axis represents the share price of the stock, which is currently trading over here, and the y-axis, which represents the amount of profit or loss. Note the zero break-even line here. And so when the purple line, which represents the current date, and the blue line, which represents the option's expiration date, are trading below this zero break-even line, this trade becomes more negative loss. And if it trades above it, this trade becomes more positive profitable because this is a long bullish trade. And we can confirm it here on the Greeks. We have a positive delta trade. If it was a short bearish trade, it would be a negative delta. But be aware of the risk of this trade. We have a negative theta decay, which means that as time goes on, this trade will lose in value. And that is why you can see here the purple line drops down lower to the blue line as we approach the option's expiration date. Since these options lose value through time, the break even on this trade moves higher as time goes on. And so you can see here, even though these call options have a strike price of $60, the stock needs to trade above $62.16 per share for this trade to be profitable at expiration. Due to this risk, we only took a small position in this trade. We don't invest a lot of capital into these higher risk trades because we invest most of our capital into the lower risk, higher probability of profit trades that we share on our website. We'll put a link to our website here where you can also learn more trading strategies to boost your profits and gain an extra edge beyond just picking the best stocks to beat the market. And if you missed our previous Delta Airlines video showing how we made more than 500% profit, we'll put a link here. Let us know in the comments below. Are you also buying the dip because you think Delta Airlines stock will go up? Or do you think it will crash down? As usual, please like, subscribe, and until next time, let's keep tracking the trades of the rich so everyday investors can profit too. Take care and have a wonderful day.